Most of the product here is going to fall within the conventional loan guidelines, but we're sitting in a unit here that's priced at well over $1 million.
Absolutely.
What's happening with jumbo financing these days?
Well, one of the concerns that many people have currently with jumbo financing is that they're not interested in taking an adjustable rate mortgage in order to get a mortgage these days for a jumbo product. Reason being inflation.
Jumbo, let's define for people who might not know, is a loan over...
Well, in Cook County, it's a loan over $417,000. So for a single family property, which this is. And so what that means is if you need to take a mortgage out of, let's say, $750,000 or $750,000, right now, many people in that market are aware of the fact that you can get very attractive financing if you're willing to take on a 5-year or a 7-year adjustable rate mortgage. But with that comes the risk that at the end of that period, the rates in the market, when you have to refinance, are not going to be as attractive as they are today. Whether in the adjustable rate mortgage market, and then all of a sudden, your payment's going to be much higher and you're not in as attractive of a situation financially. The beauty of what I'm about to say is the fact that they currently have come out with fixed rate jumbo financing. So one of the things that would actually hold me back from getting a jumbo mortgage today would be the fact that I'm thinking that perhaps in the next 8 years rates may go up because they're pretty low right now. So the only way I would ever make a move in that direction would be if I can get the security of a 30-year fixed rate jumbo mortgage. And right now you can do that. You can get a mortgage today, you can get $1 million mortgage as long as you're able to put down 25% at 6% 30-year fixed. And if you're able to take on a 15-year and handle the payment, which many people are, you can get somewhere around a 5.75. That's very attractive financing.
It's kind of a big spread over a conforming loan. It's what, about 130, 140 basis points higher than
It is. So the reason why the rates are higher, even with the fix, is because it has to do with risk mitigation. I don't want to get too far into it.
Let's not get that technical. But a 5 or 7 year ARM, where would that fall today?
The 5 or 7 year on a jumbo, you're in the mid to high 4s. So you're right there with the 30-year fix with conventional financing below $417,000. So you can still get phenomenal. And matter of fact, for some people, if they think, I'm going to move out of this property in 4 years. I'm interested right now in taking advantage of a 4.5%, and I'm willing to take a 5-year adjustable rate mortgage. That may be a good product for you. I'm just a little bit more conservative than that.
Okay. How are people shaking out there? Are they being conservative or looking to save money?
I think there's a balance. That's a great question, Joe. I think there's a balance. I just helped a gentleman who was a doctor, and originally what I told him was, look at the 7-year ARM, look at the 30-year fixed, and see if you can, within the first 7 years, bring, according to your normal amortization schedule, your principal balance down to that $417,000 mark. Because if you can do that, then it takes away the risk of, at the time you have to refinance, not being able to do so within the jumbo market. Does that kind of make sense?
Yep, makes a lot of sense.
So, but if for this particular person I was working with, the loan amount at the end of the seven years was still going to be like $750,000. So according to the natural amortization schedule. So at that point, what I said was, look, you're going to be paying a point plus higher in interest for the next 7 years. However, every night you go to bed, you have that peace of mind thinking, I don't have to worry about my property. I don't have to worry about my investment. I can afford the monthly payment. I may be paying a little bit more, but you know what? For the future, I have peace of mind.